Hello and welcome back to the TradeNeon software channel. My name is Simon Reichert. I'm part of the TradeNeon Academy team, and in this video I'm looking forward to analyze the 6A future, which is the future traded on the exchange rate Australian dollar to American dollar in our futures analysis platform Futures Insights. Together we'll have a look whether the future is currently fundamentally interesting and if there are any upcoming trading opportunities in this market. And as always, our quick disclaimer that trading in derivatives or securities in general involves significant risk and that this video shall not serve as investment advice and/or intermediation. And as per usual in the financials, let's start off with our dry powder indicators for our leveraged funds, which are our large speculative traders. When it comes to this group, we always want to look for positioning and open interest that is far above its regular, standards, which we can see right here in this cloud. Because what we know from the leveraged funds is that they are trend traders. So they always buy into ongoing trends, or they sell into ongoing trends depending on the current trend. And if we approach a state that is far above its regular standards, we simply have to ask ourselves if already all of the institutions are already, in this case, long engaged, which institution is supposed to buy even more long open interest. In this case, we are not at an absolute extreme positioning because recently we already saw open interest that was even higher than what we already have. So for example, 10th of February, we saw an even higher positioning in the market. So what we can conclude from this is that already some of the open contracts were closed, and that is probably also the reason why we don't have any current short signals from our OBOS indicator, which relates the current positioning, the current long positioning, to other variables, including the total open interest, the amount of involved market participants, and the price in comparison to the look-back period, which in this case is 1 year. But one thing we can also conclude is that this positioning that we have right now in the market is still more relevant for potential short trade rather than a potential long trade in the market. Let's move over to our dealers and intermediaries, and these are counter trend traders. So because they need this product for their operations, as they are, commercially dependent on this underlying good, they simply want to sell this product when they see it as particularly expensive, and they want to buy this product when they see it as currently quite cheap. And what we can take from this picture is that the long open interest is in average to below average territory, whereas the dealers intermediate short open interest is currently quite extreme. So they simply sell this product with quite a lot of conviction. And that is also the reason why the last COT report gave us a short signal in the 6A future, also when it comes to the OBS indicator with 96% strength, which is quite relevant. Next up, we have the open interest, which is quite interesting because you can see the price chart right here by this green area, and also by this line chart, by this blue line chart, you can see the open interest. And what we can take from this is that this price rally was accompanied by a surge also in open interest, which simply tells us that during this price rally, new positions were being built up that are still open in the market. So at some point in the future, they will have to be closed, which will act as market sell orders in the market, which will drive the price down. And also one additional nice side fact is that the market is currently quite liquid, so we'll have no problems getting in and out of the market, especially with options. The flow cube is currently not particularly interesting because we still have this ongoing long trend, and we will probably see that new positions are being built up in the market. So this is not extremely important for us at the moment, but it also doesn't tell us that new short positions are being built right now, so we might have to be a bit more patient when it comes to a short movement in the market. And lastly, we have our seasonals, which is quite convenient for us because we see that we have an ongoing short season in the market until the 13th of May, which is obviously quite good for us because we know we have this statistical advantage on our side that in the last 9 out of 10 years, the market fell during this time frame. And with the seasonals out of the way, we are already approaching the end of this video. So I hope there were 1 or 2 things that you can take for yourself and your own trading. And as always, if you have any questions, recommendations, or general things you want to tell us, please feel free to drop us a comment and we'll get back to you as soon as possible. With that being said, I thank you very much for watching and see you again next time.